What's going on, everybody? Now, in today's video, what I'm going to show you is why you should save your money in a life insurance policy instead of a bank. Now, to examine this, we're going to look at the pros and cons of both, and then you decide which one makes more sense to you, all right? So let's start with the bank. So what are the pros and cons of depositing in a bank? Okay. All right, so bank. Okay, and this side we're going to have the pros, and then cons. So what are the pros in a bank? Okay, so it's liquid, right? Somewhat liquid, right? So if you want your money, you can go get it. If it's a large amount of cash, then you gotta call ahead of time and get that, right? So it's liquid. It's not tied up. Pretty safe, right? It has 250K FDIC insured. Okay? So you feel assured that if you have your money in the bank, you're not gonna lose it up to a certain amount, right? So that right there, it's safe to some extent, all right? Now the cons, what are the cons? Low interest rate, right? Or low rate of return. Pretty much get nothing putting your money in the bank, right? If you have 100,000 and they're giving you 1% or less, you're lucky if you get 1%, but 1% or less you're getting in your savings account, right? So low rate of return. What else? On that low rate of return, you still have to pay taxes on the interest. Okay, so you have to pay taxes. Now, life insurance comes with a death benefit, right? But this doesn't come with one. No death benefit. Let's examine the cons and the pros of a life insurance policy, an infinite band, a maximum funded policy, whatever the term you want to use, it's all the same thing. A life insurance policy designed to generate cash and save your money there, right? So let's put LI policy, life insurance policy. What are the pros there? That is also liquid. This is not working right. Liquid, that's also liquid. That's also safe, right? Life insurance is, in fact, more safe than a bank. When banks are going upside down and going out of business, life insurance companies stay around. They've been through world wars, depressions, all that, and it's the financial backbone of America. They stay solid because they have to. They're insuring. They're protecting other people from financial distress. So they insure banks as well. So they're protecting others in time of need. So they have to be financially strong. So if you want to put your money anywhere, that's the safest place to put it. Somewhere that has to be financially strong to protect those who could get into financial distress. Hope that makes sense to you. So that's why they are so safe. They've got to be safe, and they operate differently. They're not as risky as banks, and they don't lend recklessly like banks do. So it's safe, and as opposed to banks, this has a pretty good rate of return, 5% or more. So good rate of return. Also, if you know about life insurance, you would know that it has tax advantages. That means you could actually grow the money inside your policy that you're saving, tax-free. So tax advantages. Okay, what else? It comes with a death benefit. You don't get any death benefit with a bank, right? So including all the money you're saving and accelerating your cash, the growth of your cash, you have a death benefit to pass on to your family when you die. What's the cons? Cons, pros. What are the cons of a life insurance policy? You're in the red up front, right? And I'll explain what that means. You're in the red up front, meaning when you put your money in to save, you're going to have less money up front. Why is that? That's because you're also paying for a death benefit. So obviously that's going to cost you, right? Unlike the bank, when you put $100,000 in there, you're not going to lose anything off your savings. It's going to go all towards $100,000 of savings. If you put $100,000 in the life insurance policy, you've got to pay for a death benefit as well. So you're in the red until you break even. And when you break even, it's all gravy from there, right? So you have to pay for a death benefit, but the death benefit you're getting is a lot more than what you're giving up in savings. But again, it's liquid. You can access it anytime. It's safe. More safe than a bank. It's not a limit to the safety. You have the money, whatever you put in there is safe. It's fully covered. You get a better rate of return, tax advantages, and you have a death benefit. The only bad part of it is that you actually are in the red to begin. So you're gonna have to sacrifice some time, and this is a long-term play, all right? Now, again, for the bank, obviously, it's liquid as well, safe to some extent, up to $250,000. You don't have a death benefit here where you have a death benefit in a life insurance policy. That's a huge benefit, huge difference. Taxes. Who wants to pay taxes if you don't have to? Would you? Would you want to pay more taxes, or would you want to pay less taxes? Okay? Low rate of return. So you're saving your money there and you're getting a very minuscule rate of return here, as opposed to getting 5% or better here and accelerating your cash growth. Which one would you choose? Which one makes more sense to you? Which one have much benefit? Which one have better long-term savings growth? I would say the life insurance policy, right? So hopefully that made sense for you. Now, if you have a question, or there's anything that you didn't understand, or one of the advantages that you wanted to get more information on, please leave the comment in the comment section. Also, if there's a video or some topic with life insurance that you want me to discuss for you, please feel free to leave it in the comment section. Be sure to like, subscribe, share, and with a friend. And if you haven't already done so, hit the notification bell so that every time that I release a video, you're one of the first to be notified. Until next time, see you soon.